Hello everyone. My name is Joy Maleti and welcome to Money Matters. Money Matters is an interactive show that aims to educate our viewers on their consumer rights and provide advice on money-related matters. Do you perhaps have a money-related matter that you would like advice on? Well, do contact us and we may be able to provide you with some expert advice. On today's show, we will be talking debt and debt management. And joining us to unpack on this topic is our guest, Mokgapi Mogorosi. But before that, please don't forget that you are also part of this conversation. So we would like to get your views, your comments. Do you have any questions for us? Do reach us on Facebook and Twitter using the hashtag MM on SID at the SID Media. Now join me as we welcome our guest. We are good, thank you. Yeah. As the topic says, debt management, debt relief, all things debt, I suppose, today. Maybe let's just start by defining debt for our viewers. I suppose it's as cliche as it may sound, or in its simplistic terms, what is debt?
Debt, it's in a nutshell, it's a sum of money that you owe. It might be when you borrow something, like you go and borrow money from someone, or you want to buy a car, a house, and that summed up to debt.
Yeah. So that's in simple terms. It's just borrowing.
Yeah, it's just borrowing and paying it later.
So it's when you defer the payments. So that's generally what debt is.
Yeah.
Do you perhaps want to maybe just touch on the various categories of debt that we do have out there?
There are 4 categories of debt, and number 1 is secure debt. It's when the lender will want a collateral for that debt, and then the interest rate, it's low on that one. And the second one will be unsecured debt. And in secured debt, there's no collateral required, but the interest rate will be higher on that because the lender doesn't have any guarantees that you're going to pay. So in case you don't pay, so that's why the interest is always high. And they also check your credit profile, your payment history before they can lend you any money. And the other one is revolving debt. So the revolving credit. Revolving credit, your example would be your credit card. So those are revolving credit. And revolving credit, well, it depends. In most cases, we always hear people advising that if you have a credit card, your credit score will go high. But the glitch in that is that when you use credit card, utilization percent ratio, it's very important that you must not exceed your 30% ratio of your credit available. So it's because if you use it like that, you use 100% of it or 80 or more, it affects your credit score very bad. So another one is mortgages, and mortgages is the one that is we take it for 15, 20 to 30 years loans for the houses. Even on that one, the interest rate is very low because now it's a long term and the installment are low on that also.
On that one.
Yeah.
Okay, because it's more long term. So when you mean collateral, you're referring to like security.
Security.
Okay.
Yes.
Okay, I see. And I suppose in South Africa, in recent times, we've seen the consumer debts, hitting or surging to about 1.9 trillion. And we've also seen or noted that there has been a default, or the default rate rather has worsened in recent times. And of course, I suppose that can be attributed to COVID. People are struggling to keep up with their payments and things like that. How did we get ourselves here?
Unfortunately, it was not our own doing. COVID came unexpectedly and all of us caught us off guard. And that's why most of us found ourselves in debt and like that. But according to the recent studies, it says about 20.4 billion have defaulted for the first time in January and February to March of this year. So that means COVID has hit us so bad and it affected a lot of things. So
is it just attributed to COVID? But how did we get ourselves here? Because COVID, is it because we've always been in a bad state of debt as a country or as people? Because, COVID happened and all of a sudden we're seeing things surging, but we've always had high debt. Is it because we've just been accumulating debt that when COVID hit, it's just been a struggle for people to repay?
Yeah, the thing is that South Africans, we are consumers. We are a country that does not save, unfortunately. So even before COVID, we always had challenges when it comes to debt. But again, when COVID came, it affected a lot because of many people lost their jobs. Big companies also closed. And then, it affected so many families. That's why even the debt went high. And another thing is that when people lost their jobs and then they couldn't afford to pay their debt, that's why even the default went high. Yeah.
Could you perhaps maybe then associate the accumulation of debt to poor decision making?
Yeah, most definitely. In most cases, it's like that, but not always again. But because now another thing is that some people, let's say we can take a family, a single woman is getting a salary every week of 800 rand, security guard, and then that woman cannot manage with 800. What she's going to do, she's going to make debt in order for her to survive. So some people, they make debt in order to survive for their daily needs, like your food, your shelter. They find themselves in those situations. But in other cases, it's being reckless. Like people will just have to buy something because you saw your friend buying a car or buying a house and you don't know how she managed to get it to, and then you go and compete with the person and trying to get yourselves in a lot of debt. So I think in most cases, that's what we do. We end up in accumulating a lot of debt because of competition and peer group pressure also.
And peer pressure. And I suppose that explains why the youth in this, the results of the consumer debt or the default rate that we've seen is that, the youth make up the highest default rate compared to the overall population in South Africa. So in other words, they are defaulting more and more. Is it because of peer pressure?
Yeah, well, the other day I had a conversation with my daughter. It was a very interesting one. But I learned two concepts, or I say mottos. She was telling me about FOMO, the fear of missing out. She was telling me about that most of the young people, they end up in debt in a lot of things because of they have that thing of the fear of missing out.
So we like things.
Yeah, of liking things. They don't want to miss out. They don't want to be told. They want to experience. They want to see things firsthand. So, and another one, I think it's that you only live once. Yeah. So I think those two concepts, the youth are living with it. So they are putting a lot of pressure on themselves because of those mottos.
So we just continuously spend because we want instant gratification. We only live once. And you die once.
You die once.
At the same time.
And especially when COVID hit, so many people lost their lives. And I think it put a lot of pressure. That motto became so evident on them. So they embraced that motto and lived with it. That's why maybe the default rate for a youth it's
quite
high.
Higher than the general population,
yes,
right?
It is.
And I suppose just on that note, and the youth at home, you've heard it, we have the highest default percentage rate in terms of our repayments. Are we going to do better? Well, we'll find out just after the break. Please do continue engaging with us. Share your views and comments on Facebook and Twitter using the hashtag #MMOnSID. See you shortly after the break.
All of these and more on SID Media TV.
Welcome back, and this is Money Matters. We are still continuing with our discussion, talking about debt. So if you've just joined us, we are joined in studio by our guest, Mr. Mogapi Mugorosi, who is helping us unpack a little bit on this topic. Do continue engaging with us on our social media platforms, Twitter and Facebook, using the hashtag MM on SID at the SID Media. Ntate Mogapi, before the break, we were just talking about how, we often spend recklessly, especially as the youth, right? Because we are living by mottos that are driving our spending needs. We are fearing missing out, and we are driven by peer pressure in accumulating the debts that we've accumulated. Hence, we see the high default rates.
Definitely.
But I just want us to shift a bit from the actual debt and maybe just focus and zoom into debt management, right?
Okay.
Or debt relief. When we are talking debt relief, what exactly is this concept about? How does it work? Who qualifies for it?
Well, when we talk about debt relief, I think there are two approaches that I'll use. There's what we call the debt review, or others they call the debt counseling. And there's also an act that the president signed, I think, recently, of the debt relief. So the Debt Relief Act, it also helps people who earn about 7.5 and below.
Okay.
For debt relief. And it also focuses on unsecured loans. So secured loans, they must be lesser than 50,000. So they are able to write them off. Or another option in that they can suspend. You get a holiday payment. They suspend your payment for a year, 12 months or 24 months. You are able to apply for that. As long as you explain your situation, they just look at it and see if you qualify for that. They can suspend for a year. I had a friend of mine, she had a challenge, she lost her job, and then they suspended her home loan payment for 12 months. So she was able to benefit. And also we have the debt review, that one everybody, most of us are familiar with. So the debt review, it was there because of many people were losing their houses and their homes because of debt. So in case you are in that situation, you're about to lose your home and what, the debt review or debt counseling will help. If you apply, they can stop the service providers to stop harassing you. They'll protect your house, they'll protect your car. If you are under debt review and the debt counselor is making monthly payments to your service providers, then you won't be able to lose your house. Even if you are in that state, they are always able to reverse that process, and you are able. So everybody who's over indebted can qualify in that one. It's for everyone, whether you're earning 10,000, 3,000, 100,000. That one is for everyone, especially people who are over indebted. So it was specifically made for those kind of people, for every South African who feel over and burdened. So that option works for them.
I see. But it's just temporary relief. It's not that they free me from my debt, I suppose.
Well, when it comes to, for debt relief, it's just temporary until you are able to stand on your own again.
And still repay.
Still repay. So when it comes to debt review, you stay in debt until you can prove otherwise, that you are no longer over indebted. So that when you are able to pay some of your debts, and then you show them the paid up letters, and they can see you have an increase in your salary. So they evaluate and see, no, now we are in the right state, then we can remove you from debt review. Other than that, you'll stay under debt review. And when you are under debt review, you cannot make any debts again.
Yeah.
So that red flag will stop you anywhere, wherever you go.
I see. And, how do I get out of debt? Just the basic steps that one can take in trying to actively get out of debt, because I suppose with all these measures that are put in place, it does not free you from the debt. You still owe the service providers. But how do I make sure that I improve my situation and position and slowly get or rid myself of debt?
Well, number one, you must have a plan. Yeah, you must put a plan in place, and your plan must be of getting out of debt. And number two, you must make a budget. Just list everything that you owe, and you must also cut on the things that you love or like the most. in order for you to reach that goal. And if we go back to the motto of the young people, you have to change that motto for you in order for you to be debt free. And if you have made a plan, you must stick to your plan. And if your installment, let's say they say you must pay about 150, just increase it to 250 so that you will be out of that debt sooner. Yes.
Yeah.
So I think that's a simple plan, that make a plan and stick to your plan.
Yeah.
Don't divert from that plan.
Must the plan be here or must you write it down?
You must write it down because anything that you put it here, you can forget.
And you don't really apply. So
exactly.
It's actively engage with it,
With
write
a plan,
it down
yes.
and follow it.
Yeah, and also you must always check your bank statement. Some of us, if you check your bank statement, you'll see the way or the trend that you use for spending, even bank charges. You'll see every time you withdraw 100 rand, 200, they're charging you. When you add up that money, it's a lot of money that you could have done something with it.
Right.
So we should study our bank statement, and in order to see the trend, and also to check the bank charges and do something, make sure that we don't get charged like that. Maybe you can withdraw money from instead of going to your ATMs, withdraw from the tills. The charges are lesser than when you withdraw from there.
I see. And are there costs associated with debt relief or debt counseling?
Yeah. There is. The debt counselor, they always charge you some, especially for the first month. When you pay the month, they'll quote for you, they'll do a debt review, and after they've checked and assessed everything, maybe they'll tell you that from now on, if you're paying like 10,000 every month or your installment, then you'll be able to pay like 6,000. But the first 6,000, when you start paying, it goes straight to the debt counselor. Yes.
Okay.
Unfortunately, the first month goes to the debt counselor.
And that's how I'm trying to get out of debt, but I'm paying.
You're paying. But maybe the nice thing is that he has already arranged with your service providers that they cannot phone you or ask you of any payment. Even if when they call you, you must just refer them to your debt counselor. So that I'm under debt counseling. So anything that you have to discuss with me, please discuss it with my debt counselor. Here are her numbers, and you give them the numbers.
So do they assist in negotiating maybe lower interest rates for me? I mean, I'm paying a hefty amount of money.
Yeah.
Is it to assist with negotiating with my providers, other than just requesting that they park, or maybe provide me that interim relief? But do they also negotiate lower interest rates?
Yes, they do.
Okay.
And when you are under debt review, you'll see even the interest, it won't be too high for you.
Is it?
Yes.
Okay, so there are benefits once you start realizing that you are heavily indebted. And the advice that we are getting from you is that seek the services of a debt counselor.
Debt counselor. And I can only go to debt counselor. Don't just go to any debt counselor.
Yeah.
Just make sure, go to NCR website. Make sure that debt counselor is registered.
I see.
Because we've got fly-by-nights out there.
Please hold the thoughts.
Okay.
We need to take a short break. Please do continue engaging with us on Facebook and Twitter using the hashtag MM on SID. And when we come back from the break, we will continue on the fly-by-nights that are out there and the things that we need to look out for when seeking the services of a debt counselor. But we'll see you shortly after this. Welcome back, and we have unfortunately reached the end of, or rather the last segment of today's discussion, and we are talking all things debt and debt management with our guest, Mogapi Mogorosi, here in studio. Please do continue engaging with us on social media using the hashtag MM on SID. Mr. Mogapi, before the break, we were talking about precautions that, our viewers should look out for when, seeking the services of a debt counselor, or what should we look out for?
Yeah, well, it's a pity, like I was saying. So we've got debt counselors, or people calling themselves debt counselors. Sometimes you only realize that you're under debt review when you go to apply for a loan or a house, and you wonder, I only received a call, somebody telling me about debt review, but I didn't say yes. So sometimes they become so desperate that when they call you and you still say no, but they put yes on their system saying you agreed. So even if there's no money that they're taking from you, but that red flag, it's there on your profile, and you won't be able to borrow money anywhere. If you are under debt review, there is nowhere or no one, or let's say the credit regulator doesn't allow you to make any borrowing or any profit. Nobody's allowed to borrow you money when you are under debt review.
But that's quite
the
risky.
law.
That's quite, what I mean is it's quite risky then if you have someone who would just flag your name without your consent. I mean, shouldn't you be signing as part of an agreement?
Lately now, where they say through the phone, if you agree, you said yes, it's a contractual, you can get the tape later, all those sort of stories. But all I'm saying is that most of this fly by night,
they don't care.
They don't care. If just we said no, that person have lost that sale, it's frustrated and say my commission is gone, I'll show you, and I'll put you under the flag.
Oh my
word. That is why I'm saying most people are under debt review, but they don't even know that they are under debt review.
Is there a way of checking?
There is a way of checking. The law in South Africa allows each and every citizen to get a free credit report every year from your TransUnion, your Experian, XDS, and CompuScan. You can have a credit report. In your credit report, it will show you if you are under debt review or not.
Who has contacted your service providers, who has checked on your profile.
Definitely. And if you are under debt review, they will always show you who put you under debt review. You'll be able to see that debt counselor that put you under debt review. So you are able to take it up with your NCR for them to remove you or to report that people because they've put you under debt review without your consent.
So NCR is National Credit Regulator.
Yes.
Okay. And what are the benefits to debt review? What are the pros? What are the cons of actually, being under debt review?
Well, debt review, the benefits would be you'll be paying lesser installment. They were going to consolidate all your debt, and in case you're paying, like I was saying, 10,000, you'll be paying 6,000. You won't be paying more. At least you have that 4,000 that you can use for other things. And then another benefit is that they will help you. That debt review has locked you. It will help you not to make other debt. You see, you will be locked for that period of time.
They'll help you from your bad habits.
Yes, they'll help you because you can't help yourself. So you'll have a police that is helping you to make sure that you get out of debt. So, but unfortunately, people after some time, they change their bank accounts and then decide to go out of debt counseling without informing their debt counselor. When the debt counselor will try to get the debit order for first month, second month, third month, and they leave you, but the red flag is still there. You are still under debt review. And now your creditors, they'll start phoning you. Because now when they phone the debt counselor will say, no, that person is no longer with us. He's not paying his monthly provision like we agreed. So he's no longer with us. So whatever you want to do it. Right? Just phone him. You find yourself, you are under debt review, but also you are in areas, all those other things. You have judgment, and by law, if you are under debt review, you are not supposed to be having those areas and the judgment.
I see. So what are some of the disadvantages then? I think you've mentioned a lot of the benefits. What are some of the disadvantages of what implications does debt review actually have on my credit rating and things like that?
Well, unfortunately, when it comes to your credit report or your score, well, when you get out of your debt review or debt counseling, your score always goes up, especially when you are paying regularly. But when you are not paying, like you are in areas and when you are under debt review, most of the time, your score becomes 0. So that is
Yeah, of
another way.
course,
Yes,
of course.
that's another
You
way
can't
of
get
locking
credits,
you.
I
Yes,
see. You
they put
can't.
it on zeros just to lock you, so that you won't be you'll be frustrated, and you have to go back to your debt counselor for you to get out of that debt. And then another thing with debt cancel is that some debt counselors they agree with you that you're going to pay them 6,000. When you find out how much they are paying your credit providers, they are only paying them that 6,000. They are only paying them something like 1.5 or 2,000
wow.
rand. Yes, that's the unfortunate thing, that they will be taking 6,000 from you, but when you check how much, it's only about 2 or 4 or 4,000 that they are paying,
Wow.
they are benefiting. That is why it's always important that even if you are under debt review, every month you must request from your debt
A
counselor a
statement.
statement. So you say, I need a statement. I want to check if you've been paying,
But statement from my credit provider is not necessarily just from the
Yes.
debt counselor, right? A
Yes, you
statement
can
from my
go.
credit provider.
Definitely.
Oh, wow, it's so rough.
Yeah,
out
but even
there.
the debt counselor, she is supposed to give you your monthly installment, your statement, so that you also check, and you can also verify with your credit providers to see just for sure that the person is paying like you promised that he's paying. Because you'll stay thinking that they are paying, and you realize after a year or two, but you know what? When you phone your credit provider, they'll say, no,
It's only gone down by 10,000.
10,000. You were owing us, your installment was supposed to be 5,000, and we agreed with your debt counselor for 2,000. He was only paying us 1,000 rand.
I mean,
You see, so
that's so hectic. But also, I suppose for clarity purposes, the interest still accumulates on the amount outstanding, right? So in other words, even though they've renegotiated your interest rate, it still accumulates on the amount outstanding. So in other words, it's not as if miraculously they stop or they freeze the interest payments.
No, when you under debt review, especially when the debt counselor are paying, the interest rate to you are not charged any interest.
You're not? Okay, that's quite interesting. So you're not charged interest?
You're not charged any interest.
Oh, wow.
Yeah, the only time you'll be charged interest, like I say, it's when you default, maybe out of your. But if your debt counselor is paying on time, is sticking to the agreement with the service providers,
So there is benefit to this.
Yes.
Oh, wow.
Honestly.
Well, thank you so much, Mr. Mokgorosi, for all of that. So many insights. And I think here you have it, our viewers. There is benefit in debt review. So if you do realize that you are under pressure and that you're under a lot of debt, please do seek the services of a debt counselor, but make sure that that person is registered with the National Credit Regulator. But with that being said, I think we've just come to the end of our show. Please do continue engaging with us on Facebook and Twitter. We will see you next week, same time, same place, right here on Money Matters. And from me, Joy Maleti, and the rest of the Money Matters team, it is goodbye and God bless.